So Marnel, thank you very much. So thank you for coming today.
Yeah, it's a pleasure. It really is a pleasure finally getting with you guys and getting to speak to this.
Yeah, I really appreciate it. I really appreciate it. Thank you guys for being here. You guys in the camera, you're not gonna see, but we have an audience. So what we're gonna do, we're gonna talk with Marnel for a few minutes. It's probably gonna be short, and then he's gonna tell us about him, what he does, and then some good thing about his work. So Marnel, thank you for coming once again. So tell us a bit about yourself.
My name is Marnel Garcon. I am a mortgage loan officer with Meadowbrook Financial Mortgage Bankers. Me personally, I've gotten into the mortgage industry about 12 years ago. And the reason why I got into the mortgage industry was really, I didn't see much of a representative when it came to my particular background. So I'm a Haitian American, and in my culture, we take financing very seriously. So we tend to share that information with one another, who's the best, who to go to, and so on and so forth. And a lot of the people that I grew up with, my parents, my grandparents, family members, really just focused on speaking to what they knew, and that's pretty much it. So the reason I got into it, I had my start as an architect, of all things, and then I had a friend of mine that got into the mortgage industry and was speaking very highly of it, and this is one of the reasons why I focused on it, because I do feel that it's one segment of my community that is just not being spoken to properly. There's a lot of people that speak a different language. I speak Creole and French. And there's sort of a gap there. Even with the understanding of the American language, finance is a language in its own. And I feel getting into this and having the ability to speak to those of my background would help out in that community as well.
Exactly. Yeah, because that is extremely important because you need the audience needs to know you and understand
Absolutely.
you. And especially, with such a big purchase, then you need to be able to help them. So 12 years ago, you got into the business.
Mm-hmm.
Well, I'm probably gonna ask you a few questions that that you might not have prepared for, if you don't mind. So 12 years ago, you got into the business. What was the challenges at that time?
Oh, well, I mean, 12 years ago, you're talking about
Like 2000.
This is like 2007, 2008.
Yeah, that's
so
like
this is.
And everybody knows what happened in 2007, 2008.
So I like to say I got in when the world was on fire. So everything to do with mortgage loans, and truthfully, I wouldn't change it for the world because it's a learning experience. Every single loan that came to my desk, whether they had 700 credit or 580 credit or below, needed help to get out of their situation. And every single loan for the better part of the year to about 2 years was very challenging. So you had to learn how to get out of that situation, how to help people, how to maneuver certain things to get a loan done. It wasn't, this person came to you, here are my documents, and then 7 days later, like I heard from every single one of my coworkers of the heydays, you're close, you're done. It was a little bit of homework, a little bit of hard work, a little bit of muscle to really get these loans done. And truthfully, it's where I learned everything. It's where I learned the most, and how to help people is how I came to speak hand in hand with the underwriters and really finesse how to get a loan done through the guidelines. And of course, the mortgage industry has changed drastically since then, but for the betterment of the client. And still, we find these ways, and we do have, with things getting a little bit better, we do find hurdles from time to time. And I feel like experiences like that help you to understand the new problems that we might face as loan officers.
Exactly. So that's exactly how you learn. You learn when things are hard.
Absolutely.
When everything goes smoothly, you're not really learning anything, right?
Well, I'd like to say that a lot of the guys that I worked with in the past with 20 plus years experience, that was the problem that they had. They couldn't adapt when things got rough. So I saw guys with 5 years my senior, 10 years my senior, 15 years my senior, leaving the industry.
Wow.
I never knew an easy loan per se. So I got a loan I was thankful to get that person's business and work on it. And I feel like a lot of the guys that were left in the industry just simply couldn't, and you had to adapt. And if you didn't, well, they went to the wayside. And those that did have the longevity of being a mortgage loan officer for as long as I've been doing it.
That's good, man. That's good. That's very good. And tell me a bit. So, what exactly do you specialize in terms? Because I know loans is like very broad.
Very broad. Very broad.
So, what do you specialize in? And of course, after that question, we're gonna go about what the main reason you're here.
Sure. My main specialty is purchases. So, typically speaking, I would say the majority of the business that we do is home purchases, home financing. Commercial lending as well is something that we do specialize in, but we do have a wide array of programs that we offer, and I do my part to understand each and every one, so that if I have a client that comes to me with a particular problem, there are ways to fix it. I'll give you a quick example. The reverse mortgage world is something that we've been doing for quite a long time. I myself have been doing it since I got into the industry as well. And there are programs for homeowners to purchase homes with reverse mortgages to begin with. So there's a lot of different things, home refinances, home purchase, remodeling type programs that we have. But yeah, we do offer quite a wide array of programs for
That's good. So there's a lot of things out there people don't even know about.
Yeah, there's a ton. And I think for me, I light up speaking about mortgages because someone comes to me and says, I want to do this, I want to purchase this. And my job is really to find the road that best suits my client, best tailors to them. And no matter how much research a client has in terms of that home purchase, when they come to us, we really try to tailor fit something that makes the most sense to them. So some people might think, I need to put X amount of money down and that's it to buy a house, when in actuality, there are easier ways to do that. Maybe putting down a smaller amount, maybe looking into other type of investments to grow your portfolio. There's a lot that we offer.
Okay, that's good, man. Now, I think the part everybody was waiting for, because what we're doing today is really talking about people who are kind of interested in investing as well. So let me ask you a quick question, scenario. So let's say my friends and I, well, let's say everybody in the room right now, we decide to, open an LLC, and the goal of the LLC is actually to purchase properties. I know not every loan officer deal with those type of situation. So what can you advise in that? What kind of funding somebody needs? Let's say somebody creates an LLC, what kind of funding they need?
Well, I would say the first part of it is really creating the LLC. You want to protect yourself. So that's number one. And I see a lot of people coming to me with investment properties that they want to purchase under themselves. And although that's admirable and amazing, there are liabilities that come into play when it's just you doing it. So with a partnership, with an LLC, and so on and so forth, it's an easier way to protect yourself. So first and foremost, starting out an LLC is a must when you're looking at property management, property development, any of those things.
Yeah, so technically if you look into mostly do investment, so LLC is definitely the way to go.
That is definitely the way to go.
Okay.
Protection is key. You really, I've watched guys that I know personally get bankrupt off of really just one deal that they're doing, and it does happen. So you want to, one, protect yourself, protect your family, and protect the business, because starting out an LLC and growing from there is the easiest way to really do that.
Got it. Guys, so we might, well, matter of fact, we will have somebody to talk about how to create an LLC coming up soon. So I'll keep you guys posted. Yes. So now we created the LLC, and then so what's the next step in terms of getting the funding?
Well, the next step is coming to someone such as myself to really get the funding together for you, or to get you qualified for getting everything started. You need a minimum amount when speaking in terms of commercial. So anywhere from 20 to 30% is generally is what is needed in order to purchase those properties. There are qualifying standards. I do need to look at your personal as well as business taxes to generate an approval. And then from there is just a simple underwriting process to get you from point A to point B to closing.
Okay, so let's say it's like 3 people in the LLC. So you would look at the finances, personal finances of everybody in the LLC, correct?
Typically, yes, yes. Unless there's someone that is highly majority and doesn't need the others, but typically speaking, if you're in this as a partnership, we will need to look at everyone's paperwork in order to get you qualified together.
Okay. Now, well, let me say with that. So, who qualifies for it? What are the requirements?
Well, again, really, it comes down to the down payment and having a strong enough score. This is a commercial property, so mostly the requirements when you're talking about that, it's going to come down to occupancy. So typically speaking, is 51% of the building needs to be occupied by your business or what you're doing. That's the main aspect of it is going to come down on occupancy and credit criteria.
Got it.
Right.
And let's say you're renting like everything out. You're just keeping. Let's say it's a 6 family. You're keeping 1 apartment, and then you're renting everything else out.
Well, then it needs to sort of service itself. So you need to have enough money coming in that it balances the loans that you're taking out on the property.
Guys, anybody in the audience has any question to
Yes, I do
ask
have
as
a
well?
question, because you were talking about LLC. What about the other entities like partnership, corporation S?
So yeah,
Can I buy in the name
You
of
can.
my corporation at the S corporation?
You can. If it's an S corp, you can absolutely do so. If it's a C corp, you could do the same. So the LLC aspect of it is really just branding away from yourself. So again, it's all about minimizing the liability that's going to be on you. A person with an S corp is more susceptible to that than someone with an LLC. So typically speaking, that's why I would tell someone to get an LLC versus an S corp.
Like documentation wise, what kind of the additional document you will need if it's LLC versus the private person?
Bank statements. So both personal, obviously with an S corp it tends to be relatively the same, but bank statements, personal bank statements is pretty much what we need. Tax returns for the last 2 years would be
From person and the entity.
Correct.
But the question is, if LLC was specially formed to buy this particular property, there is no income tax, there is no nothing, because it's just fresh formed LLC.
There
How
are
do you do
things. There are things with no income verification programs that are out now that typically goes around that. It requires a larger down payment. Typically, it's about 35% down on that for those properties. Of course, the rate tends to be a little bit higher just because you're dealing with something outside of the norm. But it is something that can be done. Relatively, the bank statements are gonna be what they look at in order to generate how much you're putting down, what the property is doing. But yeah.
Okay, so just my question, you keep talking about the income and income tax and all the things.
Mhm.
As far as I remember from my experience, the commercial lending is all about the income that the property
That
is
the property is
producing.
generating, yeah. Which is
Right.
why we talked about the buildings itself being able to.
Right,
That's
so
it.
what do you expect to see in the personal income tax then?
No, okay, I apologize. I got a little confused with what you were talking about. Yes, if you're looking at future income of the
Not
building
necessarily
itself.
future, it could be today's income. The property
Of
is
the-
paying for itself, debt service coverage
So long as it
ratio
carries-
is 1.3, whatever.
Right.
What do you want to see in my personal income tax in this case?
Not anything. So long as that particular property shows that it can support the loan that you're taking out, it's able to be done. The criteria then becomes on you as the borrower. So credit criteria still needs to be maintained, but the business, I'm sorry, the building itself does need to satisfy the loan that is being handed out to it.
Okay.
Good. Anybody any other question? No?
You mentioned reverse mortgage. How does that work?
Well, reverse mortgage is typically for someone that either owns a property or has ownership interest in an upcoming property. If you own a property with a reverse mortgage program, you're able to cash out of that property or pay off an existing mortgage and just simply not have a monthly mortgage payment. The balance of the mortgage, because it's a negative amortization loan, tends to go up. So if you borrow $100,000 today, and X amount of years, it will go higher than $100,000 because you're not making monthly payments. So the interest is tacked onto the rear of the mortgage. If you're purchasing a property with a reverse mortgage program, this is something that typically is for a senior looking to downsize or keeping things relatively afloat. If you have a property that's $400,000 in value and you're a senior and things are getting tight in terms of income, you can literally sell that house for $400,000 and go look at another property equal in value or more and just put down what is required for the reverse mortgage. Typically speaking, that person is putting down $200,000 of that $400,000. Now that $200,000 cash is in their pocket, they're able to walk in the $400,000 home, so they're not, typically downsizing or anything or losing comfort, and they're able to be in that home and they have to pay for the taxes, homeowners insurance, but the mortgage itself does not need to have a mortgage payment. You can make a mortgage payment if need be, but it's not required of you to continue making a mortgage payment.
Oh, we're talking about that. So do you have to finish paying off your mortgage and the current property? No, you don't have to.
No, so the majority of seniors that speak to me regarding reverse mortgages are people that maybe thought that by the time they're 65, they would not have a mortgage. And for the majority of Americans, well into their 80s, they still have a mortgage balance that they're paying. Now that can be a little tough to do on a fixed income. Some just have Social Security, some are lucky enough to have Social Security and a pension, but even with Social Security and a pension, it still tends not to be enough because one, it's less money than you were bringing in to begin with, and the cost of living continues to go up. Taxes go up, homeowners insurance goes up, the cost of food goes up, your car insurance goes up, and everything stays exactly the same. So the easiest thing to do is to get rid of the biggest burden, which tends to be the mortgage. So at that point, it's a refinance to get rid of the existing mortgage on the property and refi you into a non-paying mortgage.
Interesting. All right, really appreciate it. So last question, how can people reach you?
You can reach me at Meadowbrook Financial Mortgage Bankers. If you look up my name, Marnel Garcon, I'm there. You can also reach me on social media at Garcon_MFM Bankers. And my email address is mgarcon@mfmbankers.com. Or you can just simply give me a call, 631-949-3623.
Okay. Thank you. I really appreciate it.
Could you repeat that for?
Could you spell Garcon?
Yeah.
Garcon, G-A-R-C as in cat, O-N.
All right.
I have a question to you.
Sure.
The minimum age is 62 for reverse, right?
Correct.
Can the unit be purchased in communities 55 and over with reverse mortgages? Is there any rules about it?
Yes, there are some rules because that particular community does have, some of them do have to be FHA approved in order for you to be, to purchase a reverse mortgage program there. So if you're buying a unit that is not, let's say, a villa or a townhouse, it is considered a condo. So at that point, it does need to pass the condo board for you to be able to get a reverse mortgage. So that particular condominium complex needs to be FHA approved before I can have somebody purchase a reverse mortgage program there or do a reverse mortgage program.
So how
But
do
they
we know?
still, at least one of the people purchasing, or spouses I should say, purchasing needs to meet the requirement of 62 years of age. The other person can be 25 and nobody cares. The money that needs to go down will go up because of the simple fact that you have a younger person that will be protected under the reverse mortgage laws. So even though, let's say, you know, you're 62 years of age and your wife ends up being 45 years of age, she technically does not qualify for the reverse mortgage, but because she's a spouse of a recipient, she's able to be in the property, and even when that spouse passes away, she can stay for the rest of her life under the reverse mortgage laws and not be subject to repayment of the reverse mortgage.
So speaking of that, if there are, let's say we're doing reverse mortgage refinance, and if there are two people on the deed, one is over 62, one is less than 62,
So
do
long-
we need to remove him from the deed?
So long as they're married, we don't. If you buy a property with your brother and your brother is 60 and you're 62, he does unfortunately need to come off, but he can be put right back on after closing. Back then, they didn't let you do that, but now
Now
they
they
are
are.
allowing that you can go on the deed, even if
So
you're not.
husband, let me just make sure, husband and wife, you're okay.
Spouse, husband and wife, wife and wife, you can, yeah.
Okay, and mother-daughter, father-son, mother-daughter?
Mother, father, son, it ends up being the same thing that you mentioned before with the brother.
Brother, so we have to.
So if a person is sharing the property with a mother, and depending on the age, if the mother unfortunately passes away, because I've had that happen, and the daughter qualifies for a reverse mortgage program by being 62 years of age, that is something that can be looked into. But in terms of the heirs tend to have up to a year to figure out what they want to do with the property. So typically it's 6 months with 2-3 month extensions to either purchase the property or refinance the property.
Like we have questions online.
Yeah. So someone is
Thank you.
asking if you are buying multiple property, do you use only one LLC or multiple LLC?
Depending on how much you're buying and what can be covered, you can use just one.
Okay.
Thank you very much, Irvin, for asking that question.
Okay, that's all.
Good.
Just-
Yeah, all right. Yeah, so thank you very much, Marnel. It was very, very great information. And then thank you very much for everybody who watched. And we have more stuff coming up. We will keep you posted. Have a great day. Enjoy.
Thank you very much.